Welcome back, everybody. It's currently Sunday, 27th of June in the morning, and we are going to do our usual weekly recap on last week, the week going to from the 21st up to the 24th of June. We start with a little recap. Where do we left? Did we left the gold last week? So as you can see, last week we had FOMC decision. We had ranging before. We got some optimism when the headlines of and the report of the same interest rate came out. As you see, we have the smart money that is not investing and risking money during the actual speech, but is the afterwards, after the whole FOMC speech made by Jerome Powell, that actually start to put to go in the trend, which is optimistic trend, so bearish trend on gold. We see a pullback and we see continuation in trend, pullback and continuation. Friday we got unexpected strength, as we already discussed about it. We are expecting profit taking, but sellers managed to have impulsive candles and to break below the previous lows. So we are starting now with the 21st of June. So we had this impulsive pullback, continuation, Friday making new lows, the Asian session of the Monday, and the last of the Friday, we see a pullback. We are now in a bearish sort of correction phase or pullback of this. It's a sort of complex pullback. So we see bullish candles and a correction. So this week, what are we going to have this week? Mainly on Tuesday, so not the 22nd of June, we'll have Jerome Powell testifying in front of the Congress regarding the COVID, monetary policies, job, labors, interest rates, tapering, etc., etc. Monday is meant to be quiet. Some speech, some headlines by Fed's Williams and the Bowman of Fed as well on Wednesday. Wednesday we have some PMI data. Thursday we start having PCE, which during the speech Powell says for Fed is more important than the CPI data, GDP, and on Friday we'll have the core PCE year on year, which is one of the most important things correlated with personal spending and personal income. So let's start with Monday. So Monday we are just looking at the key levels. We were expecting to push down if is might push down directly, but I don't expect price to break below the previous lows yet. I mean, there's no enough juice yet. We can see some pullback to previous levels, 1781, 1789, 1795, to then continue back. Of course, as I said, we can expect a higher pullback. The bearish trend line will be intact even at 1812. So there's no problem. There's no shift in the market structure that is going to. Okay, what is it? What is going on? So let's go on the 5 minutes. Let's zoom out a little bit, and we start moving. See, on Monday, we are currently Monday. Let's see how it's going. So, as I said, we were expecting a pullback, even at 1781 or even higher. So we start seeing a reaction at 1781, pullback, ranging. Let's see, it breaks up and gets a sort of fake out. Let's see the retest of the key level. Looks like bouncing. We got impulsive. These are all scalpable ranges. So we create an order block on top of the key level, not breaking below, creating a new high, not breaking below. this is something that as we've done in the backtesting session, when there's a sort of order block created and you are expecting the trend is bearish, this might be an opportunity to put a sell limit here, so that when it will be impulsive, it will get activated and you get already the best entry with like 45. This is way too much. This range is way too high to enter, so you have probably to go on a 1 minute to see a possible better entry, because 35 pips of stop loss is actually way too much. But let's see how it's moving. This is getting important. It's important to recognize that it is a order block created. Okay, as I said, exactly as I said. If you place a sell limit here, here is 30 pips is a lot, but you get 68 pips in 5, 10, 15, 20 minutes. Then is creating us another order block. We are now going through. We are now in London, in the New York session, so that's also the impulsive candles. We see a rebound of the 1772 key level, sort of double bottom. Let's see if it pushes up or is continuous ranging. Looks like a push up. This is a nice double bottom that you can spot. Rejection of the first time of the key level. Tries to go above. Big bearish candles. Exhausted immediately. Double bottom. You can enter here, or you can wait for something, and you have already 70, 80 pips move. Let's see now the reaction at 1781. Getting lower lows. Let's see, it's not able to make new highs. Let's see if it breaks below, because it's making lows. You can see an lower time frame bearish trend. It's creating a sort of wedge. Okay, looks like now it's starting to create highs. Look, bouncing up. Okay, we're almost at the end of London session, so the volume is going down. We are moving now to the next day, which is Tuesday. Okay, pre-London, this is Asian session. So yesterday, what did we have? We were expecting a pullback and to go down. Of course, we had tomorrow, the following day, we had the data, the testimony. So we will probably, smart money will be on the sideline, so not big moves expected. But let's move to the following day. So we see that the bearish trend line is still intact. We saw breakaway retest of the bearish trend line, this one, which was more intraday bearish structure. We can expect price to range between these levels, not until we see the testimony of Powell. So let's jump on it. Let's see how the investors acted during the day. Remember that as this is GMT, at 6 p.m. GMT we have the testimony. So what are we waiting here is, what I was expecting was a range between 1795 and 1772. Of course, it's a 250, 230 pips range, so of course you can trade it, you can scalp. As I said, if you are aware, you see 1789, you can see this failure to break above, and you can enter sells. Gold is something that does it a lot. you can, like here, you know that if you see a reaction at least 20-30 pips, you have a rebound, and that's it. So now we are currently almost London session, New York session. We are ranging in a 130 pips range. That for gold is not that much. So now we have New York session kicking in. We are rejection of the key level. We see a reaction now at 1772. Failure to break. On the 1 minute, you probably see a double bottom. This is one of the most reliable patterns that you can find. Failure, try, failure, 80 pips. So it's quite nasty, but that's why I want to learn gold, because there are so many opportunities. There was also here, I didn't spot it. Really nice triple bottom. Let's see, but it's making new lows. Now it's sort of shifting and creating new highs. Let's go. We are coming as expected. Even was a smaller range because I was expecting 1795, 1772. We were even in this 150 pips range, 1789, 1772. Let's see now. We are getting closer to the actual testimony of Powell. I'm not going to throw all the headlines this time because we will see. So now you see how the volume is dying because everybody is on the sideline expecting Powell's testimony. That is now happening. During this testimony, of course, the Congress tried to provoke a reaction in Powell in every way they could, even aggressive way. Powell stayed really neutral. He understood, he acknowledged that the economy was not ready yet. It's not ready yet. So starting to taper now will be, or to raise interest rates will be inefficient, ineffective. I don't remember the exact words, but they were foreseeing a future in the near future they will start. So what I can say was that there was still a mixed, neutral, optimistic view given by Powell. Let's see now at 9 p.m. I think CT, so 7 or 8 p.m. ended the speech. So we don't have big moves because the testimony was. Now we have New York close. The testimony was absolutely neutral. So now we go to Wednesday, the day after. Okay, we see prices ranging during night. Okie dokie. So 23rd of June, we see prices creating a bigger order block. Intraday bearish trend will be intact even if gold reaches 1803, maybe even now less of 1812. So we are expecting, if you want to scalp buys above these key levels, knowing that is a counter trend in conjunction with the SY, the dollar making a deeper pullback. We go now on dollar index. As you can see from the start of the week, we were at highs, previous highs, and since then we made a pullback, deeper pullback than this level, than the previous highs. We had a bounce. We failed to make new highs, even with the Fed speaking. Actually, the Fed speaking brought it down at the key level. It bounced back up, failed to make new highs, creating new lows. And we were expecting, okay, we are now Wednesday. We see, but will dollar bounce up or will have a deeper pullback? So now already you know what will happen. Wednesday, remember, we have some PMI data, nothing special. But so what are we expecting? Of course, if dollar has strength, we can expect a deeper pullback. Let's see how it's going, the price on Wednesday. Okay, London session, some ranging, nothing special. Reacting at the 1781, not feeling to break below. Let's see, now is making new lows, breaking the new lows. Reaction at 1781. Let's see if it breaks below. Of course, we can have impulsive bearish candles, failing to make new highs, hitting another block, rejection at 1781, and nice for 50 pips bounce up as usual. Hamilton level failing to make new highs, but with New York, this is New York kicking in, New York Stock Exchange kicking in, last tap of the 1781, and 130 pips in half an hour, 1 hour. Yeah, in 15 minutes. So this was New York Stock Exchange after hitting this, being in this order block. It's not even another block because as you can see, price was continuously making new highs. It's low, but it was making since the day before. So now this impulsive is just thanks to New York Stock Exchange volume. We see reaction double top at 1795 and reaction on the downside after failing to break above. So we see an immediate correction of these impulsive bullish candles. We see an immediate correction to, we go again at 1781 key level, bouncing up. Let's see if now it breaks below. It's trying and managed to. Okay, we are almost at New York close. So what do we see here was, let's see if we saw it on exactly. We are here. We saw a deeper pullback on dollar, causing this spike up, all this spike up, move up. We saw a rebound at the previous highs, very aggressive, making price to do a bounce from the lows, and we see now in gold the same. So of course it's the opposite, 200 pips of dollar strength, pure. That's why I say, okay, the price here was making new lows, higher highs, but look the structure, look how clean this one is. This one made the same volume, the same movement in I don't know how many hours, and then in 5 hours it got corrected completely. This is much cleaner, a much cleaner action that you want to be part of. Let's see the reaction at 1772.5 for the end of the day. And we see a bounce, of course, and we have New York close with this bounce up of gold, of the dollar. So the Thursday we have, as I said, GDP and some PCE data that will come up. We already know that jobless claims were higher than expected, even though they were less than previous. We got some bad durable goods orders, CPE the same, GDP was the same. So we were not a strong sentiment, but more of a mixed one. So as I said, starting the new day, so we go on the Thursday morning, we see ranging during Asian, as usual. Okay, and we go Thursday, still intact the bearish trend line, We had, I think, the previous day, I don't remember, we had some comments from Fed around here, if I'm not mistaken, that were absolutely optimistic for the for dollar. So let me see how we go. Was the 23rd. Exactly. Close to me, we are very close to meeting the progress. Standard to start tapering. Project 2 additional quarter points rate increases. So we're very, very optimistic. Optimistic data from the Fed. So we start now Thursday. We have initial jobless claim, GDP. Let's see if we have a pullback from 1772, which has been a strong, even stronger reaction and resistance, sort of support level, resistance for the trend, support for gold, and we see how the price will react if we have some reaction at the key levels. So we go through London session. We have some ranging, nothing special happening. We have, remember, at 2 p.m., 2:30 p.m. Eastern, the data are coming out. So now we are seeing a bullish trend, playing around 1781, failing to break below. You might consider enter here or here. This is what live you could have seen and tracked and charted. This order block, this was much more clear order block created. 1, 2, 1, 2, 3, 4. We see a break, a retest, not making new highs yet. Retest, making new high. You can either enter here or here, and this exact level after the retest and fail to make below, or the key level or the order block, and then price was still creating new highs, new lower high, higher lows and higher highs, and we see nice 80 pips, 70 pips, failing to break 1789, coming back to the entrance, reacting to 1781. Of course, now we already had the data because now it's going fast. We had the data here. We had higher inflation than expected. We had what do we had? We had less worse data of the jobs. 2.5, 2.5. Some negative news for the dollar, but overall the trend was still bearish for gold because even if it was more than expected, it was still less than previous, and now we see the trend restored or resuming after reaction in 1789. Exactly. So we go now on Friday morning, last day of the week. We have some interesting data coming out. The PCE, core PCE, year on year, combined with personal spending and personal income. Let's go to 25th. Of course, we made another block, as you can see. Strong reaction and rejection at 1772.5. Today we have PCE, personal spending reports. Of course, PCE can give some pullbacks to gold, even if it's higher. Don't expect the trend to change. It's not something that is coming out unexpected. Fed is already talking for weeks that the Fed is expecting higher inflation. For this reason, should not be investors should not be afraid of this higher inflation data. So let's see how it goes. Friday, we were expecting pullbacks on the upside and then reaction and rejection below our key level. So we see breaking above 1781, creating us another block, continues up, making higher lows, same level, reaction to the key level, or the block created, breaking below, retesting, failing to break up below. Okay, now we got the data. So what do we see here as I spotted? We have another block created with these highs. Let me do this. Okay. What do we see here? Order block that was created here. Price breaks above, fails to break below this top of the order block. And with the data, as I said, we got higher inflation than previous one. We got 0% personal spending. We got an impulsive bullish 50 pips candles on the report, instantly corrected because, as I said, inflation is not a surprise. Of course, it creates a pullback on gold, but it's not a surprise. So now prices failed to break above 1789 multiple times, even on the 5 minutes time frame. On the 1 minute, it was much cleaner. You see, it's failing to break. Of course, you enter here, you see this action, but it's not even coming back to your entry. And the analysis was safer sells, high risk sells at 1789, 1795 or 1789. Safer sell 1781. This was enough confirmation to enter here, put the stop loss 20 pips, or if you enter here, you are lucky, you put just 10 pips. Of course, it's a high risk sell, but is in trend trade, and then you see price. I entered here with my demo. I stayed crystal clear after this pullback because safe sells below 1781 were pre-planned analysis. So that's why if you enter here, safe sell, okay, you miss all these 60 pips move, but that's exactly why it's safer, because you have a confirmation of the trend. Here, you had rejection, you can risk it, because you know that the trend, that inflation is not scary, that the trend is bearish, and you can get, of course, 100 pips. But even here, you get your pips, not gonna lie, not gonna be greedy. Order block gets created. Let's see if looks like the volume is down since it's the end of the week. And the simulation will end soon at the key level, exactly at the key level 1781. So this is it, guys. If my only trade that I took, the only trade that I took was here. Let's go in the 1 minute. I entered here, and I stayed, I don't remember with how many pips, like 200 pips, 20 pips, sorry, like here. So I was active even after this pullback, and I got out like with 20 pips over here, exactly here I got out. So of course I got out because I wanted the demo profit. But of course price was not giving any sign of rejection. So we had a pullback and then continuation. I could have had 40 pips, it's not a problem. I could have had high risk sells with continuous lower highs, but it's fine. So see you guys. We see you guys next week. Thank you for coming by.